Good morning, traders. Cable is pushing towards 134 for perhaps a double bottom, but we are seeing clear divergence on the 4 hour, right? That has pushed prices lower down, and there is still a bit of room to go to the 30 RSI, perhaps even lower in oversold territories. The big question is whether the UK housing weakness data that we saw recently and a divided Fed will allow cable to break through 135 or send it crash back towards the 133 handle, which is the next level as we see over here. Let me just draw that 134. You see these levels are very close to psychological levels as well, so they become a bit more important rather than that. So what happens? The UK housing market ended 2025 on a softer note, with the house price index from Halifax showing a 0.6% drop in December. That was the first fall since June. Annual growth also slowed, which of course is an indication that high mortgage rates are biting. While markets don't expect a BOE rate cut until April, and that is like a 47% probability as well. No, I wouldn't even say, flip of a coin. This softness has, limited any sort of upside in sterling, even if dollar would weaken, right? But on the US side, um, the dollar has been broadly weaker, but not recently. The latest Fed minutes also showed a divided committee. But, the reality is that we have, and we are seeing currently, a very likely pause in January with an 82% probability. However, markets are still pricing in cuts for 2026. Okay. And that kind of creates a U-shaped outlook for the dollar that favors GBPUSD upside, at least in the first quarter of the year, first half of the year. But let's not forget today's Thursday. Tomorrow is the wild card, NFP. Traders, of course, are cautious of the upcoming NFP report, especially since recent dovish comments from Fed's Waller, if I'm not mistaken, on Monday. This could validate the Fed's wait and see approach, or which is where Jerome Powell actually hung on last time he was live, or it could actually increase the chances of a rate cut. And markets currently, if I'm not mistaken, they price in around 70% chance of three rate cuts in 2026 and more than 80%, 85% for two rate cuts, right? And of course, apart from the NFP, we also have President Trump, who has stated that he might announce a new Fed chair as early as January. And that, of course, means a dovish interpretation for the markets, because who else would he nominate apart from a dovish candidate? So the technical levels here are not really different to what I just mentioned in the beginning of this recording. We are looking at pound currently heading towards 134, regardless of what happens with the NFP, unless if we just reverse quickly with the US Open, maybe that's going to be something that we need to pay attention to, or maybe even wait. A breakdown will bring us down to 133 next. That's the next major support. We also have the resistance at 133.86 that we need to break through, which is also a high activity level, given this sort of consolidation period has created an active zone over around that level. We are looking at more room to the downside, okay, currently with the RSI. So I think 134 comes either way, yeah. But if it holds, okay, if it holds, we see a 4 hour support over here. We could get a bounce. In the short term, we might be looking at the 134, 50, 40, whatever that level is. And it's also previous high over here in the short term, but that might come before the NFP. But after the NFP, as you understand, there's going to be a lot of volatility. Are we going to get another leg up? Is going to depend on that. So I would put a limit in this particular case to the upside for the pound at around the 135. What else we could do once and if, of course, we have a bottom, because for now we can assume this is the bottom, but during the trade today, I think we might go a little bit lower. What we could do is actually go and check where could this really stop. For now, and assuming that our bottom is at 134.31, we could see prices bouncing up to the 0.38 and 0.61. Okay, the 1 hour looks oversold, by the way. So keep that in mind when you make decisions about any scenario. The bullish scenario is that we break above 134.63 for now, and we target the 135 in the short term. That might be before the NFP. I repeat, the bearish scenario would be that we break below 134. We move, of course, below 134.30 now. We lose that low 134.14, and then we don't manage to form a double bottom at 134. That failure of a double bottom at 134 would probably be driving us, much lower towards 133 with 133.55 in the interim, coupled with weak UK data. Okay, and perhaps a strong NFP, if that makes sense. So, are you betting on a breakout to 135 or fading the divergence to 134? Share your trade plans in the comments and subscribe to our NFP coverage. Trade safe.